much for joining us in today's offshore investment webinar. My name is Toni Enderli. I'm going to be hosting you today and just going through a couple of topics and really excited to host you and what's actually happening. A very exciting time and world and what's actually happening in Europe. But just to give you a little bit of rundown, I've been in property now for 25 years. Our business has been running for the last 44 years. We've got a team of 100 agents in Cape Town, South Africa, where we also specialize in commercial property, industrial property, residential, and then offshore investments with regarding to the Swiss market, Portugal, Spain, Mauritius, and Montenegro. So we've got a big track record. We've built our business on really looking after our clients and adding value to our clients, understanding where each markets are going. I've been living in Switzerland now for the last 2 years, where I've been helping South African clients invest in Europe, being blue chip property in Switzerland, lifestyle properties like in Portugal, Spain, Montenegro, and Mauritius. It's been very exciting to see what's happening in the global market. So today I really just want to give you and unpack what's actually happening in the European property market, in the Swiss market. How has COVID affected property decisions and growth, and work from home versus office and commercial retail. And then I'm going to be unpacking different structures, gearing, what interest rates are doing, what the banks are doing, how people are lending and structuring their investment. Property is always going to be, always is and always will be a long-term investment, but your strategy is key to keep and your legacy with regarding to family. So you don't get taxed. Everyone has to be taxes. I'm not a tax expert, but I'm there just to give the information so our clients can make effective choices. We've got the best teams when it comes to legal, tax, banking, how to get your money out the country in the correct manner so you're not in trouble. And then I'm going to just explain and unpack our latest investment project, which is in the Swiss Alps, Lauchernalp Swiss resort residences. Very exciting. One of the best and last opportunities to invest in Switzerland. So I'm going to be unpacking that. So to get started, what's been happening in the Europe property market from 2020 to 2022. If you look at growth, your top sort of middle performers, you're looking at Austria, United Kingdom, Ireland, France, Austria, Czech Republic, Spain, and Portugal as you're pretty much dominating with Switzerland. With Europe and Brexit in the UK, some interesting things that's starting to happen. If you look at what happened in Spain, a lot of people in the UK and Ireland were buying property in Spain, the second homes. Now with Brexit, that's starting to change and limit, but it's also created other opportunities in COVID where people can work from home and people are therefore choosing better lifestyle opportunities to work from, better weather, better lifestyle, spending more times, but I'm going to unpack that a little bit later. So if you look at your average growth in Europe between 3 and 5%, top performing between 8 and 10%, and I'm going to unpack that a little bit more. If you look at major cities, London, Berlin, the bigger cities have taken a little bit of knock, and the reason for that is because of COVID. People don't want to be confined in smaller spaces. They'll rather be out the suburbs because they can work from home. They've got better lifestyle and they're not cramped. So urbanization was more popular, and you find that other lifestyle cities did a lot better, where people could do more and have a better lifestyle in that sort of lockdown. So if you look at anything between 1 and 3% growth, if you look at Dublin, Vienna, Porto, Madrid, really getting between 7 and 10% capital growth. So markets have been still very strong, depending on the certain regions, which I unpack as well. One of the biggest levels on what's interrupting, like if you look at the stock markets today, if you look at what's happening in inflation, petrol prices, gas prices, inflation is getting hammered, which is linked to then interest rates. And if you look at the target in the Eurozone where it's affecting UK and Europe. The inflation is increasing, but they see that, to start coming down in the next 2 to 3 to 6 months. But that is going to be linked to interest rate hikes, and that is going to be interesting in what happens with, supply and demand in certain segments of the market. In property, there's certain segments that will always do well. Commercial and retail taken a huge hammering because of COVID, but as people start getting back to work, that should adjust, but there is going to be a pricing correction. Now, I get this question a lot, what is the impact of, coronavirus in the real estate markets? So, especially where we're seeing, resort developments in Switzerland, in Portugal and Spain, Cape Town, what has actually happened is the opposite has happened. People are making decisions to have a better lifestyle with their family. They want to be able to have a healthier lifestyle, spend more time. They'll want to have a home office and a better lifestyle where, 3-4 years ago, it was everyone was living in the cities. People were living in the cities because they didn't want to commute. Now that's changed, and it's put a massive demand in resort style development. So if you look at what's happened in Switzerland, a lot of the resorts pretty much sold out, been really big growth because people have bought second properties to have a better lifestyle, because now they can work, and they can work from a better lifestyle, spending more time with their family, engaging more in nature and lifestyle, which I think there's going to become a very popular trend going into the future. Because what we've realized is that, what's the point of working so hard and at the age of 65 and enjoying life? People are now saying, what, I want to live life now. I want to be healthy. I want to be in nature. I want to be outdoors. I want to spend more time with my family. And that is going to be making big decisions in the property market. And it's going to be a major trend going forward. So if you look at, for example, Switzerland, the city centers, predominantly, if you look at Zurich, everyone living closer to Zurich, higher property prices, massive demand. What's happened in COVID is people thought, I can actually live a little bit out the cities. I can commute, or I can work from home office 2 days a week, 3 days a week, and in the office 2 days a week, which means people are making decisions around lifestyle versus before COVID. So what's actually happening in the Swiss property market, if you look at interest rates and growth, mortgage rates, you can get anything between, 1 and 2%. If you look in 2021, you're looking at 1%. Now you're looking at 1.25%. You can get 10-year fixed mortgages at around 1.6 to 2%. If you look at the demand is still outweighing the supply. Because of lower interest rates, which is obviously a key driver, but people always know what they're going to get in the Swiss property market. There's limited stock, there's high demand, which means that if you look at single homes, building permits were up around 7%, and if you look at apartments, was down because the availability of land in Switzerland is very scarce. That is zoned and ready. With the Swiss government clamping down on new developments in ski resorts, it's put a massive demand in these lifestyle areas of Switzerland, which I'm going to unpack a little bit further. If you look at vacancies, single family homes to apartments, it's only like 0.49% to 0.45% in 2022. And that's, again, just people wanting to own property that can have a better lifestyle, bigger demand. There's not enough developments that's happening, and it's a supply demand scenario. If you look at price growth, a couple of slides I showed you what was actually happening in Europe. Your average was between 3 and 5%. Switzerland single family homes was 5.4% in 2020, 8% in 2021, and 2022 we're looking at around 5%. Apartments, again, 5% in 2021 was 6%. In 2022 we're looking at in 2022 we're looking at 5%. Property growth in Switzerland is always going to be gradual, but you're going to always have growth. Land availability scarce. Building cost is going up. If you look at what's happening with gas, oil, supply chains from China, it puts development costs up, which means that any development that goes up is going to be more expensive, which is going to create higher capital growth if you get into the market. Now, I am not a financial advisor. I believe in property all the way, been in property my whole life. And I always know that, in property, you're going to have growth between 5 and 10%. But one thing for sure is you're never going to have any losing by 20, 30, 40, 50%. And speaking to financial advisors and the bankers, they always say diversify, diversify, diversify. But if you just look what happened in this last 2 weeks with the digital currencies, going from 59 and dropping like 50%, you're never ever going to have property dropping by 50%. So my view is always going to be long term. And if you're looking at securing your legacy for your family and leaving a legacy behind, property is the best investment profile platform that you can invest in for longevity. So for all there is space for crypto and digital and blockchain. And if you look at what's happening in the stock market, there is going to be a correction. All I'm saying is property is the best position to be in for long term. Now, something that's very interesting that we've unpacked is showing why, like a lot of clients in South Africa who didn't buy with me 2 years ago, they bought property in Andermatt, Swiss Alps. They stopped, they got in at 395, 400. Those properties are now worth like 600, 700,000 over 2 years. A lot of people thought, well, you know what, with COVID, who's going to be going to these resorts? And this is the biggest element that life has taught us in COVID. People want to be outdoors. They want to be out of the cities. They want to spend more time with their family. They want to have a better lifestyle. And that is really driven ski resorts in Switzerland. If you look at what happened in Europe, Switzerland remained, all the ski resorts remained open. Yes, some of the restaurants couldn't open fully, but the terraces were open. All the ski resorts compared to, Austria, France, Italy, it was the most consistent. If you look at capital growth, central Switzerland and Valais showed the best growth from 2019 to 2021, double digits of like 18%. And supply was down like 20 to 30%. And the only reason for that is because there are no more developments that can be approved in the ski resorts, because they don't want a majority of these ski resorts owned by foreigners. It's given a massive growth to the property market. If you look at, just to give you a little bit of introduction, what's happening with selling per price per square meters. If you look at the Start Valley, like 32,000 Swiss francs per square meter, Verbia 23,000, San Moritz 22,000, Zermatt 21,000, Andermatt, Swiss Alps. They started selling when they launched 15 years ago at 8,000 Swiss francs a square meter, now selling at 18,000. Grindelwald 16,000 a square meter, Divorce 14,000, Saas-Fey 13, Wengen 12,000, and then Crans-Montana 11,000. The development that we're launching now, we're launching below last year's price, between 10 and 11,000 per square meter, which gives the last opportunity. And my goal in the developments that I do, working with developers to understand where the market is, unpack what the market needs, design that linked to what clients are after. So if you look at traditional real estate, if you own your own property and you live in it, it's an asset, but it's actually a liability. It's costing you money. It's costing you heating, rates and taxes, water, you're living. It's not bringing you income. If you buy a second property, again, it's the asset. It's going to get you growth, but you're using it as a second home. The best way to invest in property is to actually buy as an investment, get the return, and use that return on your living expenses, which covers your property, it covers your second home. So if you're looking at buying a property versus lifestyle, always look at the numbers. What is your investment capital? What is your return? And what is going to be your best return on investment? So if you look at what's actually happening in the market in Switzerland, why Switzerland has become such an attractive asset. So if you look at all our development opportunities in Cape Town, if you look at Spain, Portugal, Montenegro, Lustica Bay, Mauritius, Switzerland is the best blue chip opportunity that I recommend all my clients. It's number one, yes, it's more expensive. If you compare a studio or one bedroom in Switzerland, yes, it is very expensive. But if you look at any major city in the world, Cape Town, the waterfront, if you look at London, if you look at the prime sort of areas, if you look at America, if you look at all parts of Europe, your prime properties, blue chip, is always going to be more expensive. So why Switzerland? The stability of the Swiss real estate, good quality life, innovation, stable legal framework to make Switzerland very attractive. And then the other big thing is the Swiss franc. With the Swiss franc being a lot more. Diane, can you, if you just mute yourself? That's all good. It's, the Swiss franc, if you see how the Swiss franc is strengthened against the euro, strengthened against the pound, it's strengthened against the US dollar. So if you're buying an investment property, you're getting growth of 5 to 6%, capital growth, 5 to 6%. If you're getting a return of investment of 5%, you can double numbers. And if the Swiss franc carries on being as strong as it is, which it is, because Switzerland is viewed is safe, stable economy, financial perspective, and enjoys, well-functioning political infrastructure. The strength of the Swiss government and bonds are offered at very low interest rates. Well, that is what makes Switzerland such a great opportunity to buy. And that's why the growth is done so well, but the supply is not enough, which creates, the demand overweighs the supply. So as a foreigner, you cannot own residential property in Switzerland unless it has got special rights for foreigners. So for example, in Andermatt, you've got special restrictions that foreigners can buy. If you look at our project in Lauchernalp resort, because it's resort status, you're buying the property, you can put it in your name, you can visit as much as you want. It's not timeshare, it's in your own name. You can sell it whenever you want. You can get finance up to 50% on it. And at the end of the day, it really boils down to you owning a residential property in a resort that gets fully managed for you, and you get the benefits of using the property when you want to in summer and winter. So really, really exciting what's actually having this opportunity for our clients. And it really is one of the last chances to own exclusive property in the Swiss Alps. Where is Lauchernalp? Lauchernalp is in the valley of Lauchernalp. Lauchernalp is the magical valley that is, skiing all over the world and skiing all over Switzerland. Is probably the best valleys that I've ever experienced in my family. If you look at commuting time, travel time from Geneva, 2 hours, from Zurich, 2 hours 50, from Milan, 2 hours 45. So it is very, very central. If you look at other resorts, Alesh Glacier, it's 50 minutes away, Crans-Montana, 50 minutes, Zermatt, an hour away, Grindelwald, an hour and 30, Saasveld, an hour and 30, and Chamonix, 2 hours. So super central. It's next to, in the valley of Pfad and Kippel, Weiler, and it is the most majestic, is linked to the glacier surrounding. It's a ski in, ski out resort, over 2,000 meters high, and one of the biggest levels of ski resort developments with global warming and everything else. A lot of ski resorts are at 1,200, 1,400 meters. This is sitting at 2,000. There's no cars in the village, so you ski in, ski out. Your off-piste skiing, adventure skiing, is one of the best in the world. And it really is something that is very excited. We're launching Tourmaline, which now reservations are open, which is apartment from 395,000. We've got basically, 7th highest ski and ski out resort in Switzerland. There's integrated living residences, studios, 1 beds, 2 beds. It's open for foreign ownership. And this is one of the biggest levels of, if you are in UK, if you're in Germany, if you're in Spain and Portugal, Cape Town, South Africa, what we teach and help our clients with is that you live in your city, you've got that lifestyle, but you have something that is in a Swiss franc investment profile, where you're going to get stable growth in the Swiss franc, you're going to get stable growth, capital growth, you're going to get strong rental investments, return on investment, which is diversified to your own portfolio. If you look at all the units are fully furnished, super luxury, it's turnkey with professional rental management. So when you buy a property in Lauchernalp, you get to choose when you're using it, and then when you're not using it, The resort manages it for you, so you don't have, if you buy a unit, you can't put it on Airbnb and all the bookings.com and other platforms. The resort manages it for you, so you don't have any headaches. And that's one of the most exciting elements to it. Glass fiber internet connection and for remote working. This is becoming one of the most popular elements for remote working, for people to get out of the cities, to be in nature, and to have a better lifestyle. Our resorts has ski mountain bike rooms, spa areas, saunas, steam rooms, members lounge, bar, and every single unit has mountain views. So at this current point, we've got one building that's developed and sold out. We're going to be building a clubhouse with restaurant, spa, gym, kids area. And then we've got Termalian, which is the apartment suites that we've just launched open for reservations. We're only going to be launching to the open markets in July, August. And what we do is we literally, being in the industry for the last 44 years, we're always open to our clients. First, they get the best opportunity to invest before we're open to the market. We haven't opened to the Swiss or European market. So the people that get in first get the best opportunities. So what this will look like over the last 3 years, it's not a very big development. You're looking at maximum 70 apartments over the next 3 years. And once that is done, there is no other land that can be developed. So with the building prices going up, with the land price on these levels on each phase will go up. So if you buy up front, that's where the prime growth is. If you look at the finishes and the style, you know, all linked to sustainability and lifestyle, and the latest styles, designs, which will link it up to one of the best ski in, ski out resorts, and becomes very boutique compared to a lot of other resorts. There's a big trend that people are trying to get to smaller resorts, that don't want the masses of people and queuing in restaurants and queuing in chairlifts. And this really becomes very unique, because the people that come to Lauchernalp are the people that come there and they stay there. You don't have the day comers coming where you have these mega thousands of people looking and you know, causing lots of traffic. That's our members lounge, spa area, all our inclusive services. So when you get through to Lauchernalp, you are able to get the concierge service with your bags linked to your property. So it is and Diane, if you, okay, we're muted. All inclusive. So when you get to the resort, because there's no cars, how get your luggage gets dropped off at your apartment or at your chalet. The best element of it is waking up. I've got 2 kids, waking up and not stressing about getting a bus or train to get into like the gondolas to take you up the mountain. You wake up, you have breakfast, have a cup of coffee, you ski to the lift, and you come home for lunch if you want. You're not having to spend time in the restaurants, but there are, you know, beautiful restaurants and beautiful bars, but it is not an element where you've got Rolex shops and fur coat shops and retail. This is a place where you escape to get away from the city. You escape to get away from loads of people. And this is where you just spend time with friends, family, and nature. So really, really exciting to be able to offer this to our clients. Strong return on investment and capital growth. So just to go through a little bit of the numbers for you, as you can see, our 395 is already reserved, but let's say you were looking at a unit at 490,000. You can get a mortgage of 50%, mortgage rate at 1.5%. If you look at your cash investment at 50%, with all your expenses, you're going to be netting around between 4 and 5%. On our other units, some of the growth is between 6 and 7%. Capital growth is then, and this is really one of the most important elements of our developments, is that when you buy, you're buying in at a low market. So if you look at the average that I showed you previous in Switzerland, between 14 and 16,000 Swiss francs a square meter, we're starting at 10, 11,000. So there's between a 4 and 5% capital growth opportunity for our clients. Number 2, there is no other developments that can be developed, that can be offered to foreign buyers. When we're selling our development, we can only sell 50% of our development to foreign buyers. If you look at who's been buying in the Swiss markets, 75% of the people buying in the Swiss resorts have been Swiss, which shows you the trends and the demand in lifestyle on what has actually happened after COVID. You know, it is a winter wonderland, but it is a 4 seasons. It's an all-year resort. So our numbers are based on a 45% occupancy. We've got now mountain biking, which is exploding in the resorts. Again, in summer, people want to get away from the mass of the people. They want to be hiking. They want to be next to the lakes. They want to enjoy spring. They want to enjoy summer. And that's what they do with, you know, their family. And that's what people are investing. And that's what really has grown. If you look at a population of, you know, 8.5 million people in Switzerland, it's not a very big country. That's the same size as the Western Cape in South Africa, but it is one of the strongest economies in Europe, one of the strongest versus its population in the world. It's safe, it's neutral, plus you get to enjoy the true beauty, and it's linked to a blue chip investment, linked to the Swiss franc and the economy. If you look at all the experiences, we are launching our first summer event, which is going to be a mountain bike masterclass with Ariane Lutti, Franz Klaas, and Emmanuel. Very exciting. The 2 weekends in July. If you're interested to come experience Lauchernalp, come and see the beauty for yourself. That's going to be very exciting. They're going to be building new flow trails in September. They've got the next World Championship, Championship mountain biking that's going to be taking place in the coming years. So if you're looking at resorts, it's not that you're just investing in winter. It's an all-season lifestyle environment, which is only going to improve capital growth, yields, and the property itself. So to keep it nice and short today, an overview on what's happening in Europe, in Switzerland, property prices with inflation. And again, I would like to repeat, if you're looking at diversifying your portfolio in Europe, sitting on cash is not your best thing, because you're not going to get the best return from the banks. It costs you money to have money in the banks. So where are you going to invest? So you're going to invest in the stock market. If you look at what's happened today, again, stock markets have really, really crashed hard. Bitcoin, digital currencies crashed hard, lost 50%. Property in the long term is going to be your best investments. It's brick and mortar. Land price, building costs, demand in smaller areas is always going to be your best bet. I hope you enjoyed today's webinar. Our next webinar will be on Portugal and Spain, which will be running in 4 weeks' time. This webinar was recorded, so if you clocked in a little bit later, you'll all be getting a recording of today's webinar. I'm wishing you an amazing day, and thank you for your time in logging in today.